Alrighty guys, what is going up? I hope you guys are all having a great and amazing day today. Now in today's episode, we're going to be talking about why I am buying $2,000 worth of Square stock. So I hope you guys enjoy it, and overall, I hope you guys learned something. And if you guys get anything in value out of this video, please repay me with a huge like. It's greatly appreciated. And subscribe to the channel if you aren't already. Also guys, go ahead and subscribe to the Carter Farr Show. That is my podcast. That'll be the first link down below. And check out my blog, moneywithcarter.com. That's my blog. So now let's jump into it. Roll the intro. Let's go. Bam. So for those of you that don't know what Square is really an online payment system and an online transaction system that allows you guys to go ahead and buy things online. And they do have a couple other things like those little credit card processors that I'm sure you guys seen at small businesses. They're white, they have the cool touchpad, they're honestly really cool. Also, Square owns the Cash App. The Cash App was a top app on the App Store, and on there, it's a huge competitor with Venmo and Robinhood. I know you might be saying, well, how can you do both? Well, it's really simple. You can get the debit card and you can send money to friends, family, and everyone who has the Cash App, and you guys can buy like fraction shares of almost any company out there for as little as $1. And it's a really cool way for beginners to go ahead and start investing and make their money. And you guys can buy Bitcoin if you guys are into that. That's awesome. So now that we know what Square is, how good and solid is the company? Well, year to date, the stock is up around 140%, which is absolutely crazy. That's beating the S&P 500, that's beating the Dow Jones, the NASDAQ, and a lot of other blue chip stocks. Now, I do think that Square honestly used this whole recession to their advantage. Since people weren't able to go ahead and shop in brick and mortar stores and they could only shop online, I do think that made Square's pockets a little bit bigger. Also, during this whole recession, the Cash App jumped to the top 10 finance apps in the App Store, which is absolutely crazy. And their revenue grew around 64% year over year. Also guys, the Cash App helped generate around 164% revenue, which is absolutely crazy because honestly, that is a huge jump. And I do think that this stock could double or triple within the next couple of years. Since people weren't able to go ahead and like give cash out and stuff like that, Cash App's transactions went through the roof and up about 50%, which made a ton of money to Square. And I do think the future for that payment system and for that little app is extremely large. So when looking at a company, it's super important to look at long-term debt and cash on hand. The reason why cash on hand is so important is because if that's say the company shuts down and they can't make any money, how long can they stay viable for? Well, the Cash App can stay viable for a pretty long time because they have cash on hand around $1.9 billion, which is an overall like 120% increase year over year. Also, their gross profit increased around 58%, which is extremely large, and that's around $580 million, so that is an ungodly amount of money. But one thing to keep in mind is the Cash App did actually open up some long-term debt during this time. I understand you might be saying, well, Carter, I don't want to buy into a company that has debt. It's very common for companies to take on long-term debt to grow their business. It's extremely common. Amazon, Apple, a lot of blue chip stocks have it. It's something really not to be too worried about. It's super common. You don't want a huge jump of like 5 or 1,000% because that's a little scary when a company does that. This is only about 2.16 billion. I understand that's still a lot of money, but for how large Square is, it's really nothing to be worried about. So with margins around 5%, really what that means, for every $100 that Square brings in, they really profit around $5.15. Now you might be saying, well, Carter, that isn't a lot of money. And yeah, that's kind of like in the middle of the pack with a lot of companies. If you compare it to Tesla, this is extremely higher. Tesla has a profit margin of around 1%. So for every $100 they bring in, they actually only profit around $1. So honestly, that's something I really wouldn't worry about it. So me personally, I'm a huge believer in Square, and I'm gonna go ahead and buy $2,000 worth of this stock. So now let's go ahead and look at support resistance, where I see it going, where some analysts think it can go, and I hope you guys enjoy it. Let's go. Bam. Alrighty guys, so we have ticker symbol SQ here. This is the one and only Square. You guys can see that this is a very, very basic chart. Nothing too complicated here. So drawing out support and resistance, it looks like we do have some resistance at around $100, which is fair because stocks have tendencies to break at whole dollars and half dollars and hundreds and fifties. So looking at this, you guys can see we just have a clear resistance. Some more resistance down here at around 85. The stock broke above that. Looking at it right now, it does look like there's really no new resistance in sight, which is a good thing, but it's also a bad thing because when a stock gets overextended like this, there's a sell-off no matter what. You can look at almost any stock chart and there's a sell-off. It's just a matter of time. So the biggest thing with investing into stuff like this is, should you go all in right now or should you wait? So the strategy that I'm going to use is what you call dollar cost averaging. So I'm going to take about $2,000 and I am going to invest it. I'm going to probably buy 1 share or 2 shares per month for the next couple of months. And I'm just going to get a good overall average price, because if this continues to go up, I'm still going to make more money. But if this falls, then I'm just going to average my price down. So it's kind of like a win-win for me. But honestly, so you could technically say that this flagged out right here. So this could possibly be the next support here at around 130. But realistically, we're just going to have to see here. Looking at the RSI, you can see that this is crossing into little overvalued territory. So pretty much any time that it broke above here, you guys can see we had sell off and a little bit here. So honestly, just a matter of time. But realistically, perfect long-term stock. I understand that this is a stock that I can invest in, and I don't have to check it day to day. I can check it monthly or every 2 months or whatever, and not really worry about it. Huge believer in the company, and I'm excited to see what happens. So that is it though. I hope you guys enjoyed the episode, and if you guys did, make sure you guys smash the like button. We'll see you guys tomorrow in another episode. Remember to stay happy, stay positive, and overall stay safe out there. We'll see you tomorrow. Take care. Bam. Bam.